with Champions Real Estate Team at Berkshire Hathaway Home Services Ambassador Real Estate Company. My name is Mark T. Wehner II, team leader, Champions Real Estate Team. And then joining me today is Russ Williams with Williams Mortgage. So we jump on here every Wednesday over the lunch hour, kind of give you a rundown of what's going on in the real estate market in the last week. Just kind of keep you informed if you're thinking about buying, thinking about selling, or in the middle of one of those processes. So we can kind of get you, coach you up and get you as much information as possible and all that kind of stuff. So similar graphics we use every week. So looking at new listings, new contracts written, as well as sold homes. So it's kind of funny. We had exactly the same amount as of like 9:30 this morning of new listings that came on the market and then sold homes. So it's kind of funny. 391 were new listings that came active over the last 7 days. New contracts or contracts that went pending, 437. So you're kind of asking, how can we have more contracts written than we had listings go active on the market? Well, some of those houses never hit the market. So they were agents kind of playing matchmaker, knew a house was going on the market, buyer and seller worked out a contract price in that regards. And some of them may have been the existing homes that were on there, even new construction spec homes through that process of it. So we're still seeing kind of that one in, one out kind of mentality, is one's coming in, one's going out on the active market side of it. So we look at in the kind of 30,000 foot view, show the graphic that we usually go over every week. Kind of 30,000 foot view of the Omaha Lincoln MLS. We have 1,176 active homes on the market in our multiple listing service. And then breaking that down, kind of the Omaha metro area, the Douglas South County, we have 562 active listings for your viewing pleasure. And then for breaking that down number even further is the existing homes is at 214 active listings, new constructions at 348. Months of inventory is about just under 1 month of inventory. What that basically means, if no new houses came on the market, we would be out of houses to look at in less than 1 month. So not surprising in the times that we're in. A little perspective. So when I got my license in 2008, there was about an 8 to 9 month supply of inventory with about 6,000 homes active on the market. So obviously you've seen a kind of complete different market shift since 2008. And then average sale price is up a little bit from last week. It was at 298. We're at 299, just under there. So existing homes kind of right around 270, new construction right around that 455, 450 price point for new construction average sold price. So that is up, about 14% from this time last year for our average sold price. So it's kind of indicative of what the market is doing. And I know before Russ and I got on here, Russ will talk about interest rates, but we were touching on, the average sold price going up, and as kind of the press clippings that we're seeing out there as interest rates are going up, which is customary when we see the inflation and all that kind of fun stuff going on and the uncertainty in the marketplace and the Fed's getting rid of their balance sheets of the mortgage-backed securities and all that kind of fun stuff. But, as we're seeing that increase in our average sold price, as we're seeing potentially coming into a recession, all those indicators, inverted yield curves and all those fun numbers that we all look at. But that's something that will potentially, we don't have a crystal ball, but, if interest rates do improve, in the next year and a half or so, that would be a good time to refinance a house that maybe you bought this year rather than waiting until next year for the lowest interest rates. But if we see a continuing appreciation of those property value or the prices, you're going to be paying more. That $200,000 house, if it goes up 10%, 20 grand, it's 220 next year. And if interest rates are, it's just kind of just simple mathematics. And that's just one of those things. We try to do our Champions Real Estate Team is basically give you that information and see what is best for you. Because I know when my wife and I, when we were buying in the middle of thinking about building a house like a couple of years ago, I told my wife for every $1,000 you go up or down on a purchase price, it's going to affect your monthly payment by about $5. So I go, honey, if we save an extra $5,000, we're only going to save ourselves $25 a month. But if the cost of that, we built our house, if that cost of new construction is going up exponentially, that, $5,000 isn't really going to put much of a dent, and we're going to be paying that much more next year for that house. So that's the same for what we're seeing with the existing home. So, so maybe over the next year or so, I can save some extra money. Well, that's great. Save the extra money, but is it really going to help you kind of in that, monthly payment standpoint. When I told my wife that, she's like, oh my gosh, that's all? She's like, $1,000 only gonna save us $5 a month. And I was like, yeah, so it is. It's just kind of knowing those numbers. And that's what we're here to sit down and talk to you about, and just kind of give you that information. Does it make sense, to buy now, buy later, hold off, because as we're seeing rent. So if you're renting a house or an apartment, those costs are not going down. And simple fact of, working with investors here at Champions Real Estate Team, with our clients that are buying investment properties, some of them in the recent weeks have been quoted at, above 6% interest rates, for their mortgages for their rental houses. So that, bumps up their mortgage a lot. So every 1% of your interest rate going up or down affects 10% of your purchasing power. So, and that's going to affect your monthly payment, which in turn, if it's you're an investor, you're going to want to cash flow a property. So if you're getting those higher interest rates, in turn, it's going to lead to higher rents. And so it even makes more sense to buy a house now than renting a house, because you're putting way much more money into, someone else's mortgage than your own mortgage at that point. Now, if you have credit you got to clean up and all that kind of stuff, that's stuff that Russ, can help you with as well. Put you in contact with people that can help you do that, and get that ball rolling, to get you into a house and get you into home ownership in that process. So, but yeah, I guess we'll jump into with Russ on what's going on the mortgage side of it. It's obviously ups and downs and all that good stuff. So what are you seeing?
Mark, the last 2 days have been a little bit friendlier too, as we've seen mortgage rates improve ever so slightly in the last couple of days, but we are sitting at several year high for interest rates. And this is, this kind of mirrors everything else you're seeing out there. The cost of gas, bread, everything is going up right now. The Fed, of course, as we've talked about, is acting to try to bring inflationary pressures down. And if they're successful, that likely will bring mortgage rates down as well, because inflation is the enemy of mortgage rates, if you will. It's quite likely, though, Mark alluded to it, that the Fed, since they were late to respond to the inflationary pressures that we're all experiencing right now, they typically overshoot, which means they typically kick the economy into a recession. We're already seeing some leading indicators of a recession. Two major banks have already forecast a recession. More and more economists are saying that we have a recession on the horizon. Having said that, even with those things on the horizon, the analysis companies that we follow are suggesting that over the course of the next year that we could see home price appreciation anywhere from 5% to as much as 15%, even in a market like Omaha. And it's important to note, Mark, that if we only saw 5% appreciation in home prices over the next year, and if interest rates did in fact come down next year as a result of a recession, your payment is going to be the same on a home that you purchase next year at the lower rates as it would be today for a home that you purchase at the higher rates, but at the lower price point. The difference, though, Mark, and this is important, is twofold. One is you can refinance that property, refinance that loan that you have this year. But that if you waited until next year, that home is going to result in you needing to bring more money for down payment next year, as well as owing a lot more on that property. So we encourage you to look now as opposed to wait for what that price might be next year. Also, in the event that you are watching the news, a lot of what they're telling you guys is not accurate. For example, just this morning, CNBC, well-respected, had a piece that they were saying that first-time homebuyer rates were over 7%. Guys, it's not true. Simply, flat out not true. Don't believe what you're hearing necessarily in the media, because they don't work in this business all day, every day. First-time homebuyer rates are not that high. So having said that, it's important that you talk with a team like Mark's or give me a call so we can walk through and make sure you have the true story. It's not CNBC that's making your home loan. It's Williams Mortgage. It's not CNBC that's selling you the house. It's Champions Real Estate Team. So you want to work with professionals that do this every day, as opposed to buying into the hype that sometimes is flat out not true in the market.
And are you seeing like grants for first-time home buyers? I know we just touched on first-time home buyers. Is there some of that, any grant money out there for them that you're seeing?
There is some grant money. Most of the grant money comes out in the first quarter of the year, and has limited funding available. So a lot of times that money is called for. Some of the grant programs out there, for example, there's one that's offered through banks that's called the Federal Home Loan Bank Set-Aside Program. That's up to, I believe it's $7,500 this year. but there's a limited number of those available to each lending institution per year. So be sure when you talk with your lender to ask what grants they're aware of. There are also grants based upon, for example, maybe you had a family member who was a service member, maybe you're not. There are some grants for folks that have parents who are service members. So be sure to ask those questions. Some of those grants might require some pre-license, or pardon me, some homebuyer education, if you will. But a lot of times that can be done via Zoom. It doesn't always require that you be in face-to-face settings.
Yeah, and like I said, if you're going to get a grant, it gets a little bit of maybe some free money in that regard. So it's worth sitting, on your computer for a little bit. But yeah, so I mean, I think right now, like we said, it's always a great time to buy and sell. And obviously it's working with an agent, that knows exactly what they're doing and working in the trenches, basically day in and day out, and trying to get, getting contracts accepted and all that kind of fun stuff. So it is just making sure you have a game plan going forward. I just did a Zoom meeting with new clients a couple of days ago, and we were on talking, just the whole gamut, what's going on, things we've talked about on this video throughout the weeks of just the census data of, 6 million homes only built between 2010 and, 2019, what's that doing, and just kind of supply and demand. Is there a housing bubble? And like, Russ said that, the talking heads that are on the CNBCs and all the different news channels, they just want talking points to rattle some cages. And it's like, talk to us here, Champions Real Estate Team, or Russ, Williams Mortgage, to kind of get exactly what's going on and what we're seeing day in and day out in there, not just trying to get ratings in with regards to that. So there's a lot of things out there that, if you do feel discouraged or something like that, reach out, give us a holler. We'll sit down and talk to you and maybe dispel some of those things that are out there that may be true, may not be true. But that's just one of those things that have that information so you can make an educated decision for you, yourself, your family, for your investments, depending on what you decide to do with real estate. So, but yeah, I think I don't want to take up too much of anybody else's lunch hour, but if you have any questions, reach out to us. If you're watching us on any of the social medias, our YouTube, LinkedIn, Facebook, comment, give us a holler, reach out to me at 402-672-7670 or Russ at 290-8936. And yeah, we'll catch everyone next week. Have a great Easter, and hopefully our weather kind of figures itself out, going from 90 yesterday down to 30 some today. So, but anyways, we're used to those kind of changes and shifts in the real estate market. So we'll get you through it. So take care, and everyone have a great